Hey everybody, stock chart of the day here. So just today we're not gonna look at a stock. We're gonna look at currencies because of what's happened recently in with the U.S. looking like they're not gonna really cut interest rates. Um, you think sometimes it's like these things can be paradoxical because it's like I hope I pronounced that right. Because you think that higher inflation means you're debasing the currency and the currency should go down, but the thing is these currencies are all kind of like floating abstractions against each other, right? And none of them are really any good. The euro, Canadian dollar, Australian dollar, US dollar, they all have too much, the economies all have too much debt. In case of like Canada and Europe, way too much socialism, regulation, red tape, etc. So there's all these issues, and in the U.S., I think more the government debt is the main problem in the U.S. And so, but because a lot of times currencies trade on these relative interest rates, and inflation is lower in Europe and Canada than the U.S. And Canada and Australia have these huge housing bubbles. Like in all the major Australian cities, like the average price is like $1 million, and the two major Canadian cities, which are Vancouver and Toronto, which represent probably Southern Ontario, if you include in the Toronto area, and that Vancouver and Metroplex, or whatever you want to call it, like Vancouver, surrounding suburbs, like that represents probably over half of the Canadian population or more. And, you're talking in those areas, even the suburbs where my dad lives, the average price is close to $1 million now. So they kind of have to lower rates because a lot of Canadians take on 5-year mortgages, and of course they re-up those in 2020, 2021 when rates were near zero, and next year in 2026 is when those will be rolled over, and a lot of people won't be able to afford their houses with rates, now mortgage rates at 7% or whatever, line of credits or whatever they did at 7% rather than at 2 or 3%. So, but anyhow, so that's why Canada has to cut rates. That's what we're really getting into. So the US dollar strength, this is we're more going to talk about the Canadian dollar. Let's go quickly look at a 3-year chart. And we can see the US dollar is actually breaking now via the up. This is a fund that tracks the US dollar index. And you can see that it's broken up. We'll look at the USD before we look at the Canadian dollar. And you can see here, because the up is leveraged, that's why it's breaking up. So we're not breaking out on the actual US dollar index. But if we do break this 107 area, we probably can get back to these highs back here. And this is a very nice saucer basing pattern that looks like will continue higher. And again, part of the problem will be rates, because it does look like Canada and Europe are going to start cutting in June, and the US may not cut at all. So this is the Canadian dollar. We can see this kind of breakdown out of 73.50 on this base. It's 72.50 now. So we have this support here that happened in both, 2022, 2023, twice, of around 72 cents. And if we break 72 cents, we're probably going to be headed down to 68 cents. And the reason I use 68 is 68 was both the early 2016 and 2020 lows. Now, during the financial crisis, it got even lower. I think it was in the mid 60s. Actually, no, it didn't. The financial crisis was only, for some reason, I thought it was that low, but no, it got to 77 cents. So that just shows you what a low level this is right now. And I remember like when the Canadian dollar, like I'll go back even further, I'll go back 30 years. When I kind of was first starting out, I was writing articles for my friend Mike Swanson's website, Wall Street Window, and he would pay me $3,000 a month. It was kind of a part-time gig. It was a great gig for a young guy. I was in my early to mid 20s starting out, and then when I would convert it to Canadian, I would get like $5,000 Canadian. So I was essentially making, remember, this is before inflation really took off. Like, I was making what the average salary was in Canada, at the time, just for like a part-time article I do once a week. So it was a great deal. That was right here in about 02, 03. And then the Canadian dollar took off. I didn't mind it taking off because I moved to the Bahamas in 05, 06. And, having a lot of Canadian dollar investments and then moving down here, it was nice to be able to switch things over at par. And I've told the story about selling Tinka Resources, buying my house with the money. And I did that in 2011. And you can see, actually, I think I was getting more Canadian dollars when I converted my proceeds from Tinka into US to pay for my down payment. So you can see like this, just like this was a big topping here. So we could go back to these lows if there is some kind of bust and that flight to safety, in the currency markets. This was the low of the tech market here, right? This was the low here. This was the low here of the 2020 bust. So we could see during these lows, you can see the low here of 2018 didn't fall quite as much than that, but we can see during these declines in the stock market, 2022, you can see the Canadian dollar. So if there is some kind of, again, liquidity event and the market goes down, the Canadian dollar too. And if we break the 72, it looks like 68 is the next support, and then the low 60s. And of course, I always say I hate to get political, but we have about, and I am a Canadian, so I still follow what goes on up there politically. They have about the worst prime minister in the history of mankind in power now, in terms of, Bill Maher just did a rant about him and went viral, or went about Canada right now in terms of, if you're into the wokeness stuff and socialism and all of that stuff going on in Canada, going to Canada's main exports is oil and gas. And like one reason Canada has a trade surplus right now is reading, this is really interesting. Canada has a trade surplus because they still produce a lot of gold and silver, in places like British Columbia and Quebec and Newfoundland, there's a lot of mines and they export a lot of the gold and silver. And because, the Canadian dollar kind of eroding like this and gold and silver going higher, remember, gold and silver in Canadian dollars terms, let's quickly look at this here, is well, this is gold divided by the Canadian dollar, but you're talking like, it's like, yeah, it is. It's like over $3,000 an ounce. So what you have to do is just add a few things onto this, right? So if it's over $3,000 an ounce in Canadian dollar terms. So I think it's like $3,200 an ounce in all-time highs. So these Canadian dollar, that means like the amount of gold, in terms of dollar amount has gone up. It was just 2,700 at the beginning of the year. So we're up over 20% in Canadian dollar terms. So they're getting more of that gold, and that is helping actually the trade surplus in Canada. So you can see that here, which is actually another irony about Canada, because they have all this gold, they're exporting all this gold, and the Central Bank of Canada owns no gold. I would hope that even though gold prices are no longer, uber cheap, I would hope that Poilievre seems to be a very, intelligent guy, the conservative leader. If he wins, I would hope that he would buy. And I actually know someone who knows him quite well. So sometimes I give this guy a little nudge and say, hey, you should tell Poilievre to do this. Not that they're going to listen to me, but I think that a lot of the policies I would agree in would be something conservatives or libertarians or whatever would agree in. But anyway, I digress. The Canadian dollar looks like, so another thing too is Trudeau has been attacking, one of Canada's largest industries, two of Canada's largest industries. Mining, he's not pro-mining at all, even though he needs a lot of the metals for his green policies. And then he's not pro-oil and gas at all. We all know he's, got issues with Alberta. He's tried, they've tried to ruin the oil and gas industry in Alberta. It hasn't worked, but like, hopefully Poilievre turns that around. Because one thing I will say, I'm critical of a lot of the old conservative politicians in Canada, because when Harper was in power, things that I like to see, cutting spending, cutting taxes, never really happened. They don't really happen. What happens is, I find the conservative governments kind of hold that steady. So Canada was having balanced budgets. The dollar was strong. When oil was strong. That's what this trade was about here. It was all, Canadian dollar had a high correlation to oil. That correlation is now gone because, again, it's not seen as oil friendly, the current government. So it's not like money plows into the country because the government is anti-energy. I think that will change, hopefully, under the next regime. But anyhow, in the short term, I just think the election in Canada won't be till the fall of 2025. So these current policies will stay in place. And if we get, again, this kind of liquidity event, you could definitely see the Canadian dollar down back at these lows. And it's and I still do a lot of junior investing. So, that's the kind of not great thing. I guess the thing is, when you're doing this junior investing, you're looking for stocks to go up 2, 3, 5x. So you're not so concerned with the currency going down 10%. Okay, I guess I will just leave it at that. And so today's chart is the Canadian dollar getting near the short-term support. The next support is around 68. And then really the lows of the early 2000s is the next support after that. So, and the Canadian dollar and US dollar going up and down for me personally is always kind of a wash, because I'm paid in American dollars from the companies I work for. Myself and my own subscriptions. etc. So that means I can turn around and buy more Canadian dollars when I buy deals. But then, and then if the Canadian dollar goes up, okay, I don't make as much in Canadian dollar terms in terms of my salary, but I own a lot of Canadian stocks because I own resource companies and these juniors. And of course, that's why this was such a great period for me personally from about 2002, 2011, because the junior market did great. And you had the Canadian dollar appreciating 60% in value. So it was a good time for me, just where, since about 2014, it's been pretty crappy where the Canadian dollar has gone from the mid 90s here. And of course, the junior market's been terrible as well. So, those this way things work. So I hope you enjoyed this, and we'll see you tomorrow.